Stop overcomplicating investing. You don't need to pick the next Tesla or obsess over every market trend. The real way to get rich as a beginner? 3 simple ETFs. These are the only investments you'll ever need if you want to be rich. And trust me, if you're not investing in ETFs yet, you're probably making your life way harder than it needs to be. Today, I'm gonna spill the tea on why these 3 investments are perfect for starting your investment journey today. Welcome back to Priceless Tay, where we believe getting rich is a decision, not a dream. So if you don't feel that, get out. When you hit the subscribe button, you join the rebellion where excuses die and money thrives. So if you're ready to stop surviving and start thriving, you are actually in the right place. All right, let's break this down, because if you're new to investing, you might be asking yourself, why is everybody hyping up ETFs? Why do I hear about them all the time? What makes them so special? Well, let me tell you. ETFs, or exchange traded funds, are hands down the GOAT of investing, especially for beginners. When you invest in an ETF, you're not just putting money into one stock. Instead, you're buying into a basket of investments. This could be a mix of stocks, bonds, or other assets depending on the ETF. Here's an example. If you buy shares of Apple, your success depends entirely on Apple's performance. But if you buy an ETF like VTI, which includes Apple plus 4,000 other companies, you're instantly diversified. That means even if one company struggles or fails, the others can help balance it out. It's like saying, hey, I don't want to bet on this one horse, I want to bet on the whole race. And this diversification helps reduce your risk, because the stock market can be a roller coaster, but with ETFs, the highs and the lows are smoothed out across investments inside the fund. Now let's talk about money, because a lot of people think you need thousands of dollars to start investing, but here's the truth. ETFs make investing affordable for everybody. Most ETFs allow you to buy fractional shares, which means even if the ETF's price start at $200, you can start investing with as little as $10 or even $20. No gatekeeping here. ETFs are literally built for the everyday person. And not only are ETFs affordable to buy, but they're also cheap to own. Now, this is my favorite part. ETFs are passive investments. That means you don't need to obsess over the market, check stock prices every single day, or try to time your buys and sells. They're designed to track the performance of a specific index, like the S&P 500 or the total stock market, so they automatically adjust as the market changes. For example, let's say you invest in an ETF like VT, which tracks the global market. You don't need to worry about picking which country's economy is doing the greatest, or whether tech stocks are outperforming healthcare stocks, for example. VT handles all of that for you. You just invest, you sit back, let Jesus take the wheel. No, let time and the market do the work. It's just the ultimate lazy hack to getting rich. Last but not least, ETFs are built for long-term growth. Whether you're just investing for a down payment, your dream vacation, or retirement, ETFs can grow your money steadily over time. Because here's the truth. The stock market historically grows at around 7 to 10% per year on average. So by investing in ETFs that track the market, you're almost guaranteed, I'll never say guaranteed, you're almost guaranteed to see growth over the long run, as long as you stick to the plan. Stick to the plan and don't panic sell during market dips. Patience is a virtue, but the reward is really, really worth it. Your money isn't just sitting in a savings account losing value to inflation. It's working for you, compounding year after year. ETFs are literally everything you need as a beginner investor, without the stress of picking individual stocks or paying really high fees. And the best part, you don't need 50 ETFs to succeed. You just need the right 3. So if you've made it this far, don't forget to hit that sub button and give this video a like. At Priceless Tay, our mission is to help as many people as possible, financially thrive, not just survive. All right, so for the moment you've all been waiting for, let's talk about the ultimate ETF trio: VTI, VT, and SCHD, and why they're perfect for getting rich. Let's kick things off with VTI, the Vanguard Total Stock Market ETF. If you're looking for an investment that gives you instant growth and stability, VTI is pretty much the ETF to start with. And here's why. This ETF tracks the entire US stock market, over 4,000 companies, from the giants like Apple and Microsoft to small and upcoming startups you've probably never heard of. Here's why this is a game changer for your portfolio. Instead of buying individual stocks and guessing which companies will succeed, VTI lets you own a little slice of everything. That means you're investing in big established companies like Apple, which at the time of recording this video is at over $2.8 trillion, but also in smaller companies that could be the next big thing, like that scrappy tech startup that could 10x in the next decade. So whether the big companies dominate or smaller ones explode in growth, VTI's got you covered. But the real magic, with over 4,000 companies inside, your risk is spread out across every sector of the economy: tech, healthcare, consumer goods, energy, you name it. Let's say tech stocks take a nosedive tomorrow. It does happen. No biggie, because healthcare, financials, and other sectors are there to balance it out. And with VTI, you're never putting all your eggs in one basket. And for beginner investors, that's exactly what you want. Now, let's talk about the cost, because one of the sneakiest ways your investments lose value over time is through these termites eating away at your freaking money tree, or high fees. But with VTI, that's not an issue. The ETF has an expense ratio of just 0.03%. If you want to know what all the stock market investing fundamental terms are, I do have a podcast. You can check it out and listen. Let me break that down. If you invest $10,000 in a mutual fund with a 1% fee, you're paying $100 a year just in fees. But with VTI, guess what? You'd only pay $3 a year. That's it. It's like skipping a single coffee. Low fees, more money, staying in your pocket, growing your investments. Now, let's talk about growth, because VTI isn't just a safe investment, it's a powerful one too. Over the last 10 years, VTI has delivered an average return of 12.5%. You heard that right, 12.5%. That's way better than leaving money in a savings account that's earning 0.01%. To put that in perspective, if you invested $10,000 into VTI 10 years ago and just let it sit there, it'd be worth over $32,000 today. No stock picking, no stress, just consistent long-term growth. And here's the best part about VTI. It's for everybody. Whether you're just starting out with $50 or you're a pro freaking investor with $50,000, VTI is the foundation for a strong portfolio. It's a buy it and forget it, or set it and forget it type of scenario that works for beginners who simply want a reliable core holding within their portfolio. And if you're nervous about market dips, don't sweat it, because the entire US economy grows, so does VTI. It's like owning a piece of America's future per se. You can think of VTI as your financial safety net and the way to get rich. It's the backbone of your portfolio, and it's for a good reason. All right, so VTI gives you total coverage of the US market, but what if you want to take that ship worldwide? Yeah, that's where our next ETF comes in. VT. Let's zoom out and talk about the entire world. VT, Vanguard Total World Stock ETF, comes in. If VTI is like owning the US economy, VT is like owning the global economy. Yeah, we're all gonna be Mr. Worldwide around here. And honestly, adding global exposure to your portfolio is a must if you wanna hedge against risks specific to the US market. So what exactly is VT? It's an ETF. by the title of this video, that gives you access to every major stock market on earth. That includes the US stock market, which makes up about 60% of VT, but also 40% of international stocks. We're talking about companies from super developed markets like Europe, Japan, Canada, as well as emerging markets like China, India, and Brazil. This ETF literally lets you own a piece of over 9,000 companies around the world. Think about it. When you invest in VT, you're not just buying into US giants like Apple or Amazon. You're also investing in global powerhouses like Toyota in Japan, Nestle in Switzerland, and Tencent in China. It's like having your money working everywhere. Here's why global diversification is so important too, because the US economy is strong, but it's not invincible. Think about 2008 when the US housing market crashed and sent shockwaves across the entire country. If you had all of your investments in the US, your portfolio would have taken a massive hit. But if you had VT, those international companies would have helped balance some of those losses, because when one country's economy struggles, others might be thriving. For example, emerging markets like India or Brazil often grow faster than developed markets, and their economies might even boom when the US economy is actually slowing down. And over the long term, that's a winning investment strategy. Now, let's take a look at the numbers, because VT isn't just about reducing risk here, it's also about getting rich. So over the past 10 years, VT has delivered an average annual return of 8.5%. Not as high as VTI's 12.5%, but that's because you're spreading out your investments across slower growing international markets. Still, 8.5% is amazing when you compare it to, say, the average savings account that earns 0.01%, or even inflation, which averages around 3% per year. With VTI, your money is actually growing faster than inflation. And let me tell you, those international stocks can be a huge boost in certain years. For example, in 2020, when the US market was recovering from the pandemic, many emerging markets were exploding with growth. That's the power of global diversification. And here's what I love about VT specifically. It's a one and done solution. If you're somebody who doesn't want to overthink your portfolio or balance multiple ETFs, VT makes it super simple. You get instant exposure to both the US and the rest of the world in a single investment. It's perfect for priceless peeps who want to keep things very simple, keep it simple, stupid, but still want to be smart about your money. And if you pair VT with VTI, you can even go heavier on the US stocks while getting that international exposure still. To me, it's all about the balance. Pretty much like all Vanguard ETFs, VT is super affordable to own. Its expense ratio is 0.07%, a little higher than VTI's 0.03%, but it's still ridiculously low compared to most mutual funds or even some ETFs. And to put it in perspective, if you did invest $10,000 into VT, you'd pay just $7 per year in fees. That's, again, less than the cost of, for example, a streaming subscription nowadays, and it gives you access to thousands of companies worldwide. So you're watching this video, who should invest in VT? Honestly, I think everybody, because anybody can benefit from it. If you're a beginner, VT is a great way to instantly diversify your portfolio without having to think too much about strategy. I have a whole other video on strategy too, so make sure to go check that out. If you're more advanced, VT is a great way to balance out US heavy investments like VTI or SCHD. It's especially great for anybody who wants to hedge against the risk of the US economy slowing down. All right, so with VT, you've got your entire world in your portfolio, but what about those times when the markets are shaky and you just want a little extra cash in your pocket? That's where our third ETF comes in. Let's talk about SCHD, the Schwab US Dividend Equity ETF. If you're the kind of person who likes stability and getting paid just for holding your investments, SCHD is going to be your new best friend. Okay, quick crash course. What is dividends? A dividend is basically a company's way of saying, thank you so much for investing in us. It's a portion of their profits that they pay back to us shareholders, aka you and me, on a regular basis, usually every quarter, semi-annually, or annually. So with SCHD, you're not just relying on the stock price to grow, you're literally getting cash payments just for owning it. Think of it like a rewards program for investing, except instead of points, you get money you can either spend or you can reinvest to grow your portfolio even more and create this snowball effect. And by the way, if you're new to terms like dividends and want to really understand all the investing jargon, I've got a whole podcast episode, like I said, breaking it down in plain English. Link is in the description. Check it out after this video. Now, not all ETFs pay dividends, but SCHD is specifically designed to focus on high quality dividend paying companies. These are big, stable businesses that have a history of consistent profits. We're talking about companies like Coca-Cola, Verizon, Pfizer, Pepsi, companies that are basically recession proof. The current dividend yield on SCHD is around 3.5%, which is way higher than you'd expect from most savings accounts or even bonds. And to put it in perspective, if you invest $10,000 into SCHD, you would earn about $350 in dividends every single year just for holding it. And that's on top of any growth in the ETF stock's price. But SCHD isn't just about dividends, it's also about stability. Because the companies in SCHD are focused on value and profits, they tend to hold up better during market downturns. Let's say the stock market drops 20% tomorrow. Growth-focused ETFs like VTI or VT might take a hit, but SCHD's focus on value-oriented dividend-paying companies act kind of as a cushion. You still get the dividend payments, and the stock prices of these companies tend to recover faster because they're less volatile. And like other ETFs we've talked about, SCHD comes with crazy low fees. Its expense ratio is 0.06%. And for that small cost, you're basically getting about 100 of the most reliable companies in the United States. These companies are handpicked for their strong balance sheets and consistent dividend payments. So how does SCHD fit into your portfolio? Think of it as the yin to the VTI and the VT's yang. While VTI and VT are focused on growth, SCHD is focused on income and stability. That makes it perfect to complement and complete this balance out for your risk. So let's say you're investing for retirement or you want some extra income to cover your expenses. SCHD is your go-to. Those dividends can even be reinvested back into your portfolio to help your money grow faster over time, thanks to the magic of compounding. It's called DRIP. Drip, drip, drip. And by combining all these three ETFs, VTI, VT, and SCHD, you are creating a diversified, balanced portfolio that grows steadily over time, giving you some extra cash flow along the way. Now, to wrap this up, the single most important principle in getting rich is simple. Invest a percentage of your income every single month or every single week and stick to it. Why? Because consistency beats timing. Even if the market goes down or up, your dollar cost averaging, you might hear it as DCAing your way to getting rich. Buying shares at all different price points, which does smooth out your returns over time. So how much should you invest? A good rule of thumb is to aim for 15 to 20% of your income. But hey, if you can only start with 5% or even 1%, it's better than nothing. What matters is starting now, making this a day one issue instead of a one day. So if you're ready to start, I've made it super easy and linked my favorite brokerage accounts for beginners in the description below. These are beginner friendly, super affordable, and perfect for starting your investment journey. Go check them out. And if you found this video helpful, do me a favor, hit that like button, subscribe for more weekly money tips, and share this video to somebody who needs a little nudge to start investing. Thanks so much for watching. I am your biggest fan and rooting for you. I'll see you next week. Peace.